Hey everyone, Disney CEO Bob Iger in a recent investor conference with Wall Street investors basically told them to expect higher prices for streaming services and less spending on content budgets. So in this video, I'm going to discuss what that means for Disney stock investors. Starting with Disney CEO Bob Iger saying that they were pleasantly surprised at the relatively modest drop in streaming subscribers after they increased prices substantially on Disney Plus. It was a relatively small price. I'm sorry, it was a relatively small subscriber drop in exchange for a substantial increase in prices. So that led us to believe, in fact, that we have pricing elasticity. In other words, we have pricing power. We could keep increasing prices and we won't lose that many customers. That means there's room for us to push the envelope and boost profitability in that segment, which is really good news for Disney stock investors because the Disney streaming segment has racked up billions of dollars in losses. Even though it has added hundreds of millions of subscriptions, it's coming at the expense of losses at the bottom line, and investors are looking forward to the time when the segment is incrementally additive to profitability instead of taking away from profitability, and this is one giant step forward in that direction. Additionally, Disney noticed a substantial increase in advertising demand for its streaming advertising inventory. Disney, of course, recently launched an ad supported tier of Disney Plus at a lower price point compared to the ad free tier, and marketers were very interested in buying up that advertising inventory. Disney will launch the ad supported tier in Europe later this year, and the fact that advertising demand has been robust up until this point is a good indicator of where that segment, the European segment ad revenue, will fall into later this year. So, Disney continues to plan on lean into raising prices at the ad-free tier while keeping the ad-supported tier lower. What Disney CEO is trying to do is create a bigger difference between the ad-supported version and the non-ad supported version, right? If you see that the ad-supported version is $7, but the ad-free version is $10, you're probably going to pick the ad-free version for $10. What Disney wants to do is create a bigger difference. Maybe $7 for ad supported and maybe $14 for ad free. That way there's a bigger difference between the two. And if you choose the ad supported version, the overall average revenue per user will still be close to $14 because Disney will generate roughly $7 in ad revenue per user, which equates it with the same amount of average revenue per user if you chose the ad-free version. So that's the goal here. That's what Disney CEO is saying. Hey, continue to expect price increases going forward. And in fact, Disney said that we're going to raise prices again on the ad-free version later this year. And then on the content side, Disney CEO saying, we said at the time that a lot of savings are going to come down. They're going to bring down spending by $5.5 billion. Some of that is going to be layoffs, which they've already announced, and some of that is going to be decreasing content budget. And they said that most of that will come starting in 2024 and then really more aggressively decrease in 2025 because they've already committed to most of their content budget for 2023, right? Things are already in production. So starting next year, that can be a big drawdown in terms of expenses. And with prices going up, expenses going down, profitability in the segment could really increase higher. So that's what Disney is telling Wall Street investors. Expect more price increases, expect more content budget cuts, and if you take that, a step further into what that could mean for Disney stock, it means an increase in profitability, right? Because you've got revenue going up and you've got costs going down, and that should lead to greater profits on the bottom line. But that remains to be seen. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.